Nobody has a crystal ball, but in this video, I'm going to give you a bit of an insight in where Brisbane is expected to go over the rest of 2019 and into 2020. Now, we're going to look at 6 key things in this video. We're going to look at timing of the current market. We're going to look at population growth, jobs, infrastructure, sentiment, which is very, very important at the moment, as well as government support, which looks really exciting. So if you haven't already done so, please subscribe to the channel and get ready for some information that's going to change the way that you think about Brisbane moving forward. Now, as an investor, I had a massive bias towards Sydney because I grew up there, and I honestly, until I left Sydney, thought that it was the only market in Australia and the best market in Australia. And if you live in Sydney or Melbourne right now, you know exactly what I'm talking about, because obviously in the short term, with the recency bias that we all have, those are the two markets that have kicked ass. So those are the markets on most people's radars. But what I did as an objective investor was I looked at the history based on core logic, as well as the Australian Bureau of Statistics data of Sydney versus Brisbane versus Melbourne over the last 46 years, and I was shocked by what I found. Brisbane was actually the top performing market out of those 3 cities in the last 46 years, growing by an average of 9.7% per annum. Now, there were years when it lost value, there were big chunks of time where it did nothing, and there were times where it rapidly increased in value. Sydney was number 2, growing by about 9.6% per year, and Melbourne was number 3, growing at just over 9.55% per annum. So that was the longer term picture of Brisbane, which gave me confidence to start looking more into this market. Now, this video is based on data from other people, but also on my experiences of buying over $200 million worth of property for my clients in this market in the last 4 years. Now, let's look at timing. First and foremost, there's different data sources. So BIS Shrapnel has just come out in the Australian Financial Review and said that Brisbane will be Australia's top performing capital city in the next 2.5 years, and by the end of 2021 they're expecting Brisbane property prices to have increased by 20%. Now, whether that happens or not, that's a massive thing for the Australian Financial Review to publish, and a big thing for BIS Shrapnel to put their hats on. Other people in the market, like Simon Priestley, believe that Brisbane is going to grow somewhere, based on their analysis, of around about that 13% mark over the next couple of years, and he thinks after we get past 2021, there's good potential for Brisbane to go back into double-digit price growth territory. Now, Heron Todd White, who produces a great free report each month, is putting Brisbane in the bottom of the market or start of recovery phases, which are nice places to invest. Now, the thing you need to know about timing in Brisbane is that in the last 10 years, it's basically done nothing. Core Logic is coming out and saying that it is now cheaper to buy in Brisbane when you factor in inflation than it was in 2008. And if you've just looked at the short-term bias of Brisbane or numbers on Brisbane, you would go, whoa, I don't want to touch that market, it doesn't grow. But knowing that over the last 20 years it's done an average of 6%, and over the last 46 years it's done an average of 9.7%, it sort of made me prick up and start taking notice, particularly when you look at its long-term capital growth performance, how affordable it is, and how high the rental returns are in that market. Now, in terms of Southeast Queensland right now, it's the number 1 marketplace in Australia for Australians moving to a different place in Australia. So it's the number 1 or fastest growing region in terms of Australians moving to a particular place in Australia. Now, what happens with Brisbane, based on my understanding of history, is that once every, say, 10, 15, 20 years, we get this massive migration of people moving north. Sometimes it's for jobs, sometimes it's just because Sydney and Melbourne get so bloody expensive that people just have thrown in the towel, had enough of it, and that's probably what's happening now. Or families move north because they want to buy a home for $400 or $500K rather than $1.1 to $1.3 million where they want to live in Sydney. Now, this is absolutely massive because population growth results in pressure around prices. Now, Macquarie Bank came out with an article recently where they suggested that there would be a massive wealth transfer over the next 3 years from people living in Sydney and Melbourne. Another thing that happens from a population pressure perspective is that a lot of people who wanted to retire 10 years ago, who lost half their money in their super funds in the GFC, have now recouped that money with Australian shares going to close to all-time highs or just nudging over them. So they've got their money back, and those grey nomads, as well as, you know, people looking to downsize and retire, are moving north in droves. Now, let's talk jobs for a moment, because again, this has always been on people's minds. They're like, can Brisbane really support long-term performance? From a population perspective, sorry to go back, the Australian Bureau of Statistics is looking at the long-term projection over the next 10 years to 50 years in Australia, and they believe that 25% of Australia's population, job, infrastructure and income growth is going to come out of the Brisbane marketplace. So when we talk jobs, what we're really talking about is combined average household incomes. Now, household incomes have risen quite rapidly in Brisbane over the last couple of years and are now higher per household than those in Melbourne. Now, just think about that for a moment. Prices in Melbourne are on average 20 to 100% more expensive depending on the area you're looking at, but incomes in Brisbane are higher. Now, you add population pressure to that, you add sentiment to that, you add infrastructure to that, you add timing to that, and that's why a lot of people, myself included, think that Brisbane has solid potential over the next 5 to 7, maybe 8 years. Now, from a timing perspective, Brisbane looks historically very, very interesting at this time of the cycle. Now, what normally happens is that after the recession we had to have, or the GFC, property prices in Sydney, Melbourne, and sometimes Brisbane go on a bit of a tear with all that cheap money coming in. Then we get to the stage that we've been in and we're in at the moment, which is, hey, let's just take a break. Some property prices decline. Stock market will take a belting in the next 2 years at some point. And then people come back into the market, they get more confident, and that's when Brisbane generally starts to see some meaningful growth. So I don't know if it's going to be next year, I don't know if it's going to be in 5 years or 10 years from now, but this particular stage of the cycle is generally much, much, much better for Brisbane, at least on the previous cycle's perspective, than, you know, Sydney or Melbourne. But again, the past doesn't always repeat itself perfectly. Now, if we look at infrastructure, I just did a little bit of an article on this. There's $39 billion worth of approved projects that are shovel ready or already getting off the ground in southeast Queensland as we speak, not including all of the countless private development on top of that. Now, that is very, very exciting. Brisbane is about to get its first underground metro rail line, which will take people under the city. This is a big deal. Think about how much of a difference the undercity tunnel made in Sydney when they went underneath the Harbour Bridge, and how much more it connected north, south and eastern Sydney. But the metro's going in, there's some light rail going in, and around that we're talking universities. There's a big one being built in North Brisbane at the moment. We're talking hospitals, and we're talking major road upgrades as well. So everywhere you look up here at the moment, from a roads perspective, it just feels like, you know, we're going from 1 lane to 3 lanes, or from 3 lanes to 6 ways into and out of the city, with the M1s and M3s, which are the big roads that connect Brisbane and the Sunshine Coast and Gold Coast, going under huge renovations or retrofits at the moment. Now, let's talk sentiment for a moment. Let's face it, in the last couple of years, people have been shit scared about investing in property. You probably feel the same way, or you know someone that does. At different times in the last few years, I've even got freaked out knowing what I know about the market. But sentiment is slowly starting to improve as people are no longer losing value in their Sydney and Melbourne properties. Another thing that's also happening is rates have just been dropped twice, and money is getting easier to borrow as well. So that is absolutely huge, because APRA has made it really hard for people, particularly investors, to borrow money in Australia in the last 3.5 years, and now they're starting to slowly relax some of that policy, so that the average person like me, you know, based on 2 weeks ago till now, can borrow about an extra 16% than I could have a few weeks ago. Now, I know some people that are suggesting that rates could drop as much as another 0.25% to 0.5% over the next 12 months, with the next rate cut potentially expected for November, and then maybe another one in February. Now, all of this cheap money is going to flow into the hands of people, many of them who aren't following people like myself or the people that you're following, and will flow back out into the economy and go into, supporting businesses to become profitable again, supporting the economy to continue to kick gear, but it will also go into the stock market, and we'll see all-time highs at different parts over the next 7 years, as well as some of the biggest pain in history. We'll also see asset prices in some markets that haven't grown since the GFC go through the roof as all of this cheap money comes through. Now, what all of this does is the dial moves like this, right? I knew that from 2016, maybe 2015, that the show was over in Sydney and Melbourne, but it took other people until mid-2017 to recognise it. Then we went through this period of intense bleeding, which unfortunately a lot of people lost part of their paper wealth. People that bought at the wrong time got a bit burnt. People that were speculating, and some developers, as well as construction companies that were over leveraged, have gone bankrupt now. And now we get to this point where it's starting to stabilize again. What's happened is that lots of good things are happening from a sentiment perspective, an infrastructure perspective, a population perspective, and a timing perspective, but it's going to take people another 6, 12, 18, or 24 months from today, potentially right up until 2022, to recognize that the worst is behind us for this stage of the cycle, or maybe it's not. I don't have a crystal ball, and history doesn't always perfectly repeat, but maybe that things aren't as bad in Brisbane as people think they are right now. And you'll see what I mean in 5 to 7 years time from today if you're watching this back. Now, in terms of the government support, the government has just publicly come out and said from an infrastructure perspective, in the next year, they're going to increase their infrastructure spending by 10%, and they've got something like 38 shovel-ready projects that they can bring into the pipeline. Now, what the government's trying to do with their support is driving first-time buyers back into the market with all of these first-time grants. They're trying to increase confidence in business, and they're effectively looking to reduce the unemployment rate below 4%. They're also talking about openly trying to increase inflation, which I don't think they're going to be able to do, and they're cutting rates like absolute madmen right now to try and re-stimulate the Australian economy like they're doing in Europe, like they're doing in America. Now, there's lots and lots and lots of positive things happening in Brisbane, but it's not all positive news. At the moment, you've seen Donald Trump's tweet that rocked the Australian and American stock markets, just a week before I recorded this one. You can see that, London and England is expected, or the UK expected to go into recession soon. I think America could potentially go into recession in 2020. Australia might follow into a technical recession for a period of time. And it's certainly not an environment where you just go silly, you go leveraging really hard, you get into a really negative cash flow position, and you expect everything to be okay. But if you are a smart investor, we are very, very, very close to the 10-year bottom of a Brisbane cycle. There are extremely good assets on the beach within 10 Ks of the city and within 20 Ks of the city that represent very, very, very good long-term buying at great prices in suburbs where people can comfortably and easily afford them. There's the potential to get dual income in parts of Brisbane where you can massively increase your cash flow. And I think as an investor like myself who wants to own a number of really high quality assets outright so that I can have better choices in the future, Brisbane is certainly a marketplace where it is time to get your head around it, because I think we're lifting off the bottom as you watch this video. I've watched prices literally since the election in 2019 move by about $10,000 to $15,000 in quality suburbs, and that's only been a couple of months, 2 or 3 months since recording this video. We've got some stability coming. We've also got a very unstable global environment where money is getting cheap everywhere at the same time. And historically, this is the mid-cycle slowdown point that we're in right now. So, if you're in a comfortable position with good cash, good equity, sitting there at your 1% in your bank account at the moment, maybe it's a time to start understanding Brisbane. If that is you and you want cash flow and capital growth, then jump over to my website, www.pumpedonproperty.com, book a one-on-one strategy session in with myself or my brother Simon. Let's talk about where you are, where you would like to be. Let's talk about what's honestly holding you back, whether it's market knowledge or fear or not being sure if it's the right time to buy, or not knowing if you can actually buy something. And then let's continue the conversation, and I'll do everything I can, so will my brother, to educate you so that you can go and kick ass on your own if you want to do it yourself. Or maybe we can talk about how you can become one of the limited number of people we take on for our business each month. So either way, whether you're just continuing to learn from this sort of stuff or you want some support, I really appreciate your time today. Please give this video a thumbs up. Please share it with somebody who needs to see this stuff, that's been looking at Brisbane and just wants to understand the market better. And please subscribe to this YouTube channel if you haven't already done it, where we put out heaps of free content like this one, helping you become the best investor and get choices in your life sooner rather than later. So thank you, thumbs up, have a great day, see you later.